The Roth IRA is the most powerful wealth building tool out there for most people, and I'm going to prove it to you in this video. In fact, the IRS even limits the amount of money that you can put into this type of account every year because of how lucrative it can be. So if you're looking for a crash course on investing for retirement and becoming a tax-free millionaire, this is the video for you. And feel free to skip ahead at any point in time using the table of contents down below in the description. Let's dive right in. For starters, the Roth IRA is a special type of individual retirement account that comes with a unique set of tax benefits. Most people are familiar with a 401k, which is a tax-deferred retirement account that's offered through an employer. With a 401k, you're able to contribute your pre-tax income, lowering your taxable income for that year in the process. But when you're ready to start withdrawing money from your 401k later in life, that's when you have to pay taxes on your distribution. With the Roth IRA, you're contributing money that you've already paid taxes on or post-tax income. This means that there's no upfront benefit like lowering your taxable income for that particular year. Instead, all of the benefits happen at the end. Here's the deal. As long as your Roth IRA retirement account has been open for at least 5 years, you can withdraw your earnings tax-free after you turn 59 and a half. Think of your 401k as receiving instant gratification, and the Roth IRA is a delayed form of gratification. You can either take the benefit up front with a traditional IRA or 401k and pay taxes later, or you can grow your money tax-free for your entire lifetime using the Roth IRA by contributing your post-tax income. In most cases, it actually makes sense to have both a 401k and a Roth IRA, especially if your employer offers any form of company match. Some employers out there offer a bonus contribution on top of the money that you put into your own 401k. For example, maybe they offer you a 50% match up until a certain percentage of your paycheck that you put into your 401k. Most Roth and traditional IRAs do not offer any form of match or incentive like that. However, there is a new age platform out there, Robinhood, which does offer this. We're going to talk about that in a little bit, the Robinhood IRA match, and they've become extremely popular for retirement investing as a result of this. But first, we're going to cover the contribution limits for individual retirement accounts that the IRS sets. Each year, the IRS sets a limit on how much money you can contribute to an IRA, and it normally goes up over time to adjust for inflation. For 2024, that limit is $7,000 if you are under 50 and $8,000 if you are 50 years or older. Now, it's important to be aware of the fact that these limits apply to all of your IRA accounts. So even if you have multiple accounts, that does not mean that you can contribute more than the maximum dollar value. Also, your contribution for a given tax year must be made by the tax filing deadline for the owner of the IRA, which is going to be April 15th. That means for 2024, you could make your contributions anytime from January 2024 all the way through April 15th of 2025, potentially giving you a 15-month window to contribute. Now, in addition to these contribution limits, there's also income limitations in terms of how much money you're able to earn while still being able to contribute directly to a Roth IRA. We'll get right into that, but first we're going to cover a simple strategy for becoming a millionaire using the Roth IRA. So let's say you're a younger person watching this video and you have a lot of time on your hands, so you want to become a tax-free millionaire using a Roth IRA. Well, one of the very best investments that you can make with this type of retirement account is investing in a low-fee S&P 500 ETF. This allows you to invest in the 500 largest publicly traded US companies, giving you a little slice of each one. Now, I just did a full video on S&P 500 investing. I'll put a card in the corner if you want to check that out later. According to NerdWallet, the S&P 500 index returns about 10% on average annually, assuming that you are reinvesting dividends. Let's assume you're 20 years old, meaning your contribution limit would be $7,000 per year, or about $583 per month. Using this compound interest calculator, we can determine how long it would reasonably take you to become a millionaire investing in the S&P 500. So we're going to assume you're starting off with an investment here of $0, and you're making that $583 in monthly contributions to max out your Roth IRA contribution. And then, as mentioned before, the average return from the stock market is 10% annually, and we're going to start off by looking at a 10-year time horizon. So after you follow this strategy for 10 years, we can see here that you would have about $111,000 in total value in your Roth IRA retirement account. In terms of your contributions versus your earnings, if we take a look at the blue versus the red line, you've contributed just under $70,000, meaning that you've made about $41,000 in investment gains from the stock market. But as we go forward here, you're going to see this red line accelerating at a faster and faster rate because of the exponential growth factor associated with compound interest. If we push ahead now to the 25-year mark, we're going to see a big change in the value of this portfolio. Now you're looking at $688,000, and you can see that red line accelerating at a faster and faster rate. In terms of your contributions, you've contributed about $175,000, and you've made a little over $500,000 from the stock market. But of course, you want to become a millionaire with this strategy, and it's crazy just how fast that happens from this 25-year mark. If you go ahead just 4 more years to the 29-year mark, that is how long it would take you to become a millionaire with this strategy, and you would have an account value of $1.04 million, give or take. In terms of your contributions versus your earnings, you would have contributed just about $200,000 and a little bit extra there, and you would have made over $800,000 in investment gains from the stock market. Now, because you're doing this in a Roth IRA, you do have to wait until 59 and a half to begin drawing from that to take the earnings out. You can take your contributions out anytime. We'll talk more about that later, but let's say, for example, you want to keep going with this strategy and go from age 20 to 59 and a half and see how much wealth that you can build in the Roth IRA. Well, that would mean that you would be investing for another 10 years, pushing you to the 39-year mark, and this is really going to blow your mind here, but at that point in time, you would have $2.8 million in your Roth IRA, and keep in mind, as long as you follow the limitation of not touching the earnings until the age of 59 and a half, all of those earnings are completely tax-free. In terms of your contributions, you've only contributed a little bit over $250,000, and you've made almost 10 times that in investment gains from the stock market. So it's absolutely insane how that growth just continues to ramp up because of the power of compound interest. And keep in mind, this is all based on the current contribution limit for the Roth IRA of $7,000 per year. If you wanted to be even more ambitious with this strategy, you could continue ramping up your monthly contributions as the IRS increases that contribution limit in the years going forward. Now I'm going to tell you more about the Robinhood IRA match, which has been one of the biggest pieces of news in the retirement investing world lately. Robinhood is known for their commission-free trading that disrupted the world of investing and pretty much eliminated commissions across the board for brokerage platforms. They're now having a similar disruptive effect in the retirement world because they're offering an unheard of match on Roth and traditional IRAs through their platform. And this is similar to a 401k match, which would be in the past one of the only ways that you'd be able to get any sort of extra kick-in on your retirement contributions. The Robinhood IRA match is either 1% or 3%, depending on whether or not you have Robinhood Gold, and Robinhood Gold is a premium subscription that costs $5 per month or $60 per year. You get a handful of benefits with Robinhood Gold, but the main one for the purpose of this video is that 3% match on your IRA contributions. If you're under 50 years old and you're maxing out your $7,000 annual IRA contribution, you'd be getting a $70 match at the 1% level, and you don't need to have any type of premium account for that. Or if you do have Robinhood Gold to earn the 3%, you'd be getting a $210 bonus. If you deduct the cost of your Robinhood Gold subscription on an annual basis, that means you would be getting a $150 per year bonus as an extra kick-in at the 3% level. Now, if you're over 50 years old and maxing out your $8,000 per year IRA contribution, that would be an $80 match at the 1% level or a $240 match at the 3% level. And again, if we deduct the $60 per year for Robinhood Gold, that would still be an annual bonus of $180 per year. Here's a few more details about the Robinhood retirement accounts as well. First of all, you can roll over or transfer an IRA and earn a 1% bonus on the entire amount that you bring over, which could actually be a pretty substantial amount of money. Second of all, your bonus does not count towards your annual contribution limit. It is a separate allocation of money. Finally, any bonuses that are earned through the Robinhood match do need to be kept in in the account for a minimum of 5 years. If you want to check out the Robinhood IRAs yourself, be sure to use my affiliate link, which is linked up in the description below, or visit ryanoscribner.com/Robinhood. If you use my link, you'll get a free stock in the process worth up to $200, and this is going to be a free fractional share where you're able to pick your free stock from a list of 20 plus leading American companies. And if you want to learn more about Robinhood, be sure to check out my Robinhood Investing for Beginners guide, which I will link in the corner. As mentioned before, there are limits on how much income you can earn while still being able to directly contribute to a Roth IRA. And just like those contribution limits, those go up over time to adjust for inflation. For 2024, if you are a single filer and earn more than $161,000, you can't directly contribute to a Roth IRA. And if you're married filing jointly, that income limit is $240,000. To make things a little bit more confusing, there's also a partial contribution allowed for those earning a high income that falls just under these limits. For single filers in 2024, that is $146,000 to $161,000, and for married filing jointly, that is $230,000 to $240,000. If you fall within these limits, your contribution amount fluctuates, and you're able to make a partial contribution. TIAA has a handy calculator for figuring this out, so I would recommend just using one of these free calculators. So for example, a single filer who is 35 years old making $150,000 would be able to contribute $5,132 to a Roth IRA in 2024. These income limits only apply to the Roth IRA, so if you're making in excess of that, you can still contribute to a traditional IRA because there is no income limitation there. You can also do something called a backdoor Roth IRA, which is a way to get around the income limitations. However, that is a bit above and beyond the scope of this video, but feel free to do further research on that on your own. Once you've opened and contributed to your Roth IRA, there are certain types of investments that can be made. The most common would be mutual funds, stocks, bonds, ETFs, and fixed income investments like CDs. However, in recent years, crypto IRAs have emerged and become popular as well, where you are now able to invest in crypto assets within the IRA itself. Now, you're not able to make contributions using cryptocurrencies. You still have to use the US dollar, but you can, in fact, own crypto within your retirement account. If you're looking to have the widest range of investment options available to you, what you want to look into is a self-directed Roth IRA. With this type of account, the investor is able to pick and choose their own investments rather than relying on the financial institution to do so on their behalf. In the case of Robinhood, just because we used them as a prior example, they offer both a self-directed option where you can pick and choose your own investments, or if you want some help with that, they have a portfolio builder for a custom-built portfolio tailored to your needs. And don't forget to use my affiliate link if you sign up. That way you get that free stock bonus from Robinhood. Now, in addition to the limits on how much you can earn while still contributing to the Roth IRA and the dollar value you're allowed to contribute per year, the IRS also specifies what type of income can be used when making a contribution. The gist of it is you can only contribute earned income, which would be money that you earn through a job, or this could be income earned from a business that you own. The types of income that do not count, that are not eligible for contributions, would be rental income from real estate, interest income, money from a pension, stock dividends, or capital gains, as well as passive income from partnerships that you're not directly involved with. So far, we've talked at length about money going into the Roth IRA retirement account, but what about when you want to start taking money out? Well, first of all, we need to define the difference between your contributions and your earnings. Your contributions is the amount of money that you are putting into the IRA. Meanwhile, the earnings is going to be the amount of money that you made in returns from capital gains as well as dividends. Here's the cool part about the Roth IRA. At any point in time, you can withdraw your contributions from the Roth IRA tax-free and penalty-free, regardless of your age or any amount of time that has passed, because you've already paid taxes on that income. However, if you touch the earnings in your Roth IRA, it would have to be a qualified distribution. Otherwise, you will pay taxes and penalties associated with that distribution. And the penalty is pretty steep. It's 10% on top of any taxes that you would owe on those investment gains. So what is a qualified distribution then? The first rule here is that this needs to occur at least 5 years after the account owner funded their first Roth IRA. In addition, the Roth IRA owner needs to be at least 59.5 years old in order for this to be a qualified distribution. If you withdraw the earnings from your Roth IRA without meeting those prior requirements, this is considered to be a non-qualified distribution. As mentioned, you'll end up paying your taxes as well as that 10% penalty. However, there are a few exemptions from this where non-qualified distributions can be allowed. If you're using that money for medical expenses, pursuing health insurance, pursuing a higher education, or for childbirth or adoption expenses, there are special circumstances for each of those that you should look into. There is also a first-time home buyer exemption, which allows you or a family member to take a one-time distribution of the earnings early without a penalty, and the limit for that is $10,000. So for the most part, don't plan on touching your earnings in your Roth IRA retirement account until you're in your retirement years, or at least 59.5 years old. Another huge perk to the Roth IRA is there are no required minimum distributions or RMDs. Certain types of retirement accounts out there require you to start taking distributions by a specific age, but with the Roth IRA, there is no such thing. You can leave your money sitting there as long as you want, and you can even continue contributing to it in your retirement years as long as you have earned income in your retirement years. There you have it, guys. That's everything you've wanted to know about a Roth IRA and then some. If you made it to the very end, make sure you drop a like, subscribe, and hit the bell for future notifications of videos just like this. If you're going to check out the Robinhood IRA and their 1 to 3% match, don't forget to use my affiliate link, which is ryanoscribner.com/Robinhood, or linked up in the description below to get your free fractional share worth up to $200. You can click below to watch my video about Robinhood investing for beginners, and I hope to see you there.